Hello and welcome to GPTV on Tuesday the 10th of July. I'm Gary Peer.
And I'm Philip Kingston, and I'm in the interest of transparency, Gary. It's fair to say that it's actually not Tuesday the 10th of July.
Well, it is when people are watching.
Correct, but in the interest of transparency, it's not the 10th of July.
Well, we are right now still at the home at 13 Elmhurst Road in Caulfield North.
Correct, but this is a pre-record, and you're actually technically not here. You are.
I'm in Hawaii.
And I'm actually in Shanghai. And I've got to tell you, the reason for that is it's school holidays. Gary has chosen to go to Hawaii because he's a surfer. I have gone to Shanghai because there is all the action seems to be in China these days, and I've decided to take my family to see what's going on in what has become the second biggest economy in the world, and that has ramifications for the real estate market. So I look forward to telling you all what I've discovered in a couple of weeks' time.
Sounds fascinating. I'll be just sitting on a beach somewhere right at the moment. But let's talk about real estate, Phil, because we are here to review the market. We're going to talk a little bit about some of the properties coming up this weekend, and then we're going to talk, as promised earlier, in GPTV, back in Tara Grove, which actually comes up this weekend. We were talking about how to invest and buy in real estate.
Yep.
So let's talk about the market. Firstly, this weekend there is a couple of auctions to review. There is one in Wellington Street, St Kilda, Phil. Tell us a little bit about that.
That is
3 at 91 Wellington Street, St Kilda, on Saturday at 11:30.
That is a fantastic property, a property that has been developed by one of my favourite architectural and building firms. This was the old Neo Metro, when they were both an architectural firm and a building company. They've morphed into MA Architects and Neo Metro, but this was one of their projects, and this is inner suburban living at its finest, a boutique apartment building,
very affordable,
with a cafe downstairs, which you've just got to love that way of living.
Is this the one that I saw Jeremy do the little story on?
Correct.
Yeah, it's great, yeah.
Click onto that and have a look at the video tour of that one. Jeremy Rosens is looking after that property, an absolute winner.
And come to the auction. We're looking forward to seeing you there. There's another property in Alma Road, Phil, that's being auctioned on Sunday morning. I believe you know about that.
Yes.
4381.
It is, Gary. That is the most incredible apartment because it's been completely renovated from top to toe by our owners there. And one of the standout features, apart from being a massive apartment, is this incredible deck, which, you know, is probably, I don't know, 4 or 5 squares or 30, 40, 50 square metres on its own. So it's a fantastic and very unique property.
You're there doing the auction Sunday 12:30. While you're doing that, Phil, I'm going to be in Tara Grove. We spoke a bit about that wonderful townhouse in Carnegie, a very unique property. I'm there at 12:30.
Yeah, that'll be an interesting result.
That auction, Phil. So we're looking forward to getting through that one and seeing how we go. One of Carnegie's best units, if not the best.
Stop calling it a unit, Gary. I reckon it's a house.
Okay, it's a house, I'll call it. If that makes you feel better, you're probably right though. It is more house than unit. In Lyndoch Avenue, one of the best streets in St Kilda East. We have an auction on Sunday at 2:30 p.m.
That has been the most amazing street for us, Gary, because Lyndoch has always been a fantastic street. Has one of the biggest subdivisions in the surrounding area because most of the parcels of land are anywhere between 700 and 900 square metres. We've had the most incredible run there because it's a very tightly held street, and yet we've sold about 10 properties there over the last 3 years. Amazing redevelopment happening in the street. We're selling a parcel of land that was subdivided out of a much larger parcel of land. Brand new houses being built in this street, massive renovations. This is one to look at because it's on the high side of the street and you can get sweeping city skyline views.
Very good wrap there, Phil. Let's talk a bit about buying real estate. We talked about how we're going to do this chapter, investing and buying in real estate. It's not about how to buy real estate so much in bidding and buying, because we'll do that another time. But what should you be looking for in terms of buying real estate?
Okay, it's a great question and we could devote hours to this. But the first thing I want to say is that I am recommending and have been recommending to any person that I meet, just buy real estate. Almost doesn't matter what it is.
That's great. That's great advice.
No, just get into the market. I want to give you a couple of examples. Back in 1984, Gary, where we were very young and knew very little, as opposed to being very old and not knowing much more, but we bought 2 one-bedroom apartments in Hudson Street in Caulfield North. A one-bedroom apartment, we paid the princely sum back then, and it was a fortune of $19,000 for each apartment. If we'd held on to those apartments, they would now be worth $270,000, $280,000, maybe even $300,000, and that's in the space of 25, 30 years, and that means it's gone up by 15, 20, almost 20 times.
Why do we ever sell it, by the way?
Well, that is the most important question. Yeah. But we are great believers in investing in real estate. We do it with our own money. Yep. We've got a couple of investments, not as many as we'd like, but one of the best parts about buying investment real estate is not because it goes up in value over time, which it does, but it forces you to save. And we do live in a world where we've got so many different things that we can spend our money on. It's really hard to save. So I say to young people today, buy something, not because it's going to grow in value, which of course it will, and that's the ultimate outcome, but it forces you to get into a regimented saving program, because you can't just ring the bank and say, look, I don't think I'll meet my mortgage this week because I think I want to go out for dinner or I want to go to Bali. It's an enforced saving program, and that's the best message I can give about investing in real estate. It's real. You can drive past it, you can see it. It's not like investing in the stock market where you can buy a stock and all of a sudden they make some bad investment decisions, that company's no longer available. Real estate is something tangible.
Let's talk about getting started. I couldn't agree with you more on all those points, and as you know, I'm not a very good saver. I'm a rather good spender, actually, and I happen to be married to an even better spender.
She has single-handedly kick-started the economy, Gary.
Don't I know it? So certainly I know that buying property is one of the best things to put your money away and have a commitment of something that's locked away, something secure, something that will go up. So we both have that belief to start with.
We're on the same page, Gary.
We are, Phil. Let's just talk about getting started. How do we get started, Phil? First, you've got to get your finance together. You've got to get a deposit. You've got to work out what's affordable for you. I always say to people, buy what you can afford. I think you should stretch yourself, but not to a point where you have to compromise your life to a point of misery. So buy what you can afford, get a mortgage broker. Then we talk about what type of real estate. People say, oh, if I buy something further out, Philip or Gary, maybe I'm going to get a greater gain, undiscovered area, uncharted waters. There's a lot of that feeling going on. People talk about going out, buying something bigger, further. What's your view on that?
Look, my view is we know that the inner suburban locations, whether it be Melbourne, Sydney, Paris, New York, at the end of the day, properties that are well located in the inner suburbs tend to outshine the general marketplace. That's not to say you won't get good growth in the outer suburbs, but we can certainly talk about something that we know has stood the test of time. And it doesn't matter what city or what country of the world, people generally want to be close to the city's best attractions. And if you think about it, the city's best attractions are generally within a 10 kilometre to 15 kilometre circle of the CBD. So what we do know best is the inner suburbs. Now, whether that be from Carnegie, Glen Huntly, Caulfield, East Brighton, stretching through to St Kilda, all of these areas are well located. They're well located to trams, big tick box with a tram. They're well located to train stations, absolute huge tick box. Also strip shopping centres. We're seeing strip shopping centres driving the marketplace. People want to be part of cafe society. So if you can buy property within walking distance to trams, trains, strip shopping centres, then it's almost a certainty that property will go up. So I'm a great believer in location. The closer you can buy to those amenities, the more likelihood you have of those properties being in high demand. Also, not just from a resale point of view, Gary, but from a tenancy point of view. And let's face it, when we talk about investing, it means you need to have a tenant in the property. Tenants don't want to be car reliant. So properties that are well located will always lease quicker.
If you talk about properties that, let's say you take $500,000 as a relatively reasonable starting point for a good apartment, you can buy less, you can buy for $350,000 and $400,000 too. If you talk about $500,000 and you're going to buy an apartment, there are some advantages in buying some new stuff. I mean, the off-the-plan stuff, you have got some distinct advantages. Firstly, you've got a stamp duty saving if you buy them early enough. Absolutely. Secondly, you're probably going to get a better return on them in terms of the rent. Yes. And thirdly, you've got that whole depreciation benefit. Absolutely. So, you know, the new stuff off the plan, you do have some advantages. You will get a better return, and generally speaking, you've got those other tax allowances. Probably in terms of capital gain, some of the established stuff, maybe, Phil, performs a bit better.
Look, I'd have to say that whichever way you go, you're going to be fine, because both the new stuff's obviously got its merits.
Sit on the fence.
No, I'm not going to. If I was going to buy something, I would probably buy the second-hand merchandise.
Okay.
And
Why?
For the simple reason that
Answer the question.
Yes, you will get a better return from the new stuff.
Yeah.
You will get the depreciation schedules, but it's like buying a new car. You know, you buy a new car, it's fantastic, it's glossy, it smells beautiful, but as soon as you drive it out of the showroom, and apologies to the car dealers as we speak this, as soon as you drive it out of the showroom, you do lose 20%.
That's okay. If you're happy with that, it's okay too. Because
Correct.
some people do want that new car and they're happy to do it. And some
Absolutely.
people want that new apartment as well.
100%.
Yeah.
For my money, though, I would probably buy something in a building that's built in the 60s, 70s. They're solid brick. They're generally smaller buildings, and they're a bit more affordable. But once again, I'm not sitting on the fence, Gary, but I would say both have got their strong merits.
And if you've got $1 million, do you buy 2 flats or do you buy something with land in the house?
Look, you know, as Mark Twain, the famous American novelist, said many years ago, invest in land, Gary. He didn't say invest in land, Gary. He said invest in land. They're not making any more of it. There is no question that land is the fundamental of real estate. So I'm a great believer in land. And in fact, when I look at my personal portfolio, what I've bought and sold over the years, I think probably what I did the best out of was buying a block of land and then reselling it in time. So look, land is fantastic. One of the problems with land, though, is generally speaking, you get a much lower return because you're paying for land and not much for the building.
You've got to be able to afford to hold on.
So if I had $1 million today, I think I'd probably diversify. I'd probably buy 2 or 3 apartments. Apartments, I just love that whole apartment market, Gary.
Okay. Well, ladies and gentlemen, thanks for watching GPTV, this week's edition about buying and investing in real estate. Hopefully it's helped you. I know we've got some very experienced and very wise investors and business people that would know a lot of this stuff, but hopefully it's helped some of those that are on the way and getting started. I've unfortunately got to go, Phil. I've got a cocktail waiting at the bar right at the moment, and you're probably in some exotic temple or...
Well, I'm off to see one of the Shanghai skyscrapers today, Gary. Can I just say before we conclude, and thanks again for watching, I reckon we should probably get round to doing a first investment seminar, Gary. We could do it at the offices in St Kilda or something like that.
Let's see if we get any response on ideas@gptv.com. Is that it? Yeah, well...
ideas@garypeer.com.au. It's really not that complicated.
That's the address. Thank you. Have a great week. We'll look forward to wrapping the market up and talking about some of the new homes coming on the market next week on GPTV.
See you in a week's time.
Peer.
And I'm Philip Kingston.
Bye for now.